All right, so you sent over some really interesting stuff on stablecoins. We've got, let's see, excerpts from like an academic paper that's looking at potential impacts of some new regulations. And then we've got two versions of something called the Stablecoin Transparency and Accountability for a Better Ledger Economy Act of 2025.
Yeah, we can call that the Stable Act of 2025 for short. And you're right, the two versions of the Stable Act seem to be identical, so we'll just treat them as one.
Perfect. So before we really dive into the legislation itself, maybe just give everyone a quick overview of what stablecoins actually are, why they're such a big deal these days.
Sure. Imagine having digital dollars that are just as safe and reliable as, the ones in your bank account. But
Hmm.
you can send them anywhere in the world instantly with, very minimal fees. That's the basic idea behind stablecoins. They're digital tokens, but they're pegged to a stable asset like the US dollar.
And that stability is kind of what sets them apart from, other cryptocurrencies like Bitcoin, which are known for their crazy price swings, right?
Exactly. Stablecoins aim to offer, I guess you could say, the best of both worlds. The speed and efficiency of crypto transactions, but with the price stability of those traditional fiat currencies.
Right, right. That makes sense. See, that academic paper that you sent over actually highlights a couple of stable coins that are really dominating the market right now, Tether and USD coin.
Yeah, those are the big players for sure. According to the paper, Tether has a market cap of about $141 billion, while USD coin is sitting at a pretty respectable $55 billion.
Wow, those are huge numbers. I mean, that near duopoly, that's pretty important context for the regulatory discussion, right?
Yeah.
If this stable act, if that actually becomes law, it's going to have a massive impact on these companies and honestly, probably the entire stablecoin ecosystem.
Oh, absolutely. This act is, it's a major development,
Hmm.
and it's pretty clearly designed to bring a lot more oversight and stability to this whole stablecoin market.
Yeah, yeah. Okay, well, let's unpack some of these key provisions of the Stable Act then. One of the things that kind of jumps out at me right away is that restriction on who can actually issue stablecoins.
Right. The act proposes that only entities that meet certain criteria A and D obtain approval as, quote unquote, permitted payment stablecoin issuers. Only they would be allowed to operate in the US. That's a pretty big deal because it really raises the bar for entry into this stablecoin market, which could weed out some of the less reputable players.
Yeah, almost like creating a stablecoin club with much stricter membership rules.
Yeah.
I mean, it seems like it's a pretty clear move to build trust and, let's face it, prevent those scams that have been, a problem in the crypto world.
For sure. And the act goes even deeper on reserve requirements, too, mandating that these issuers hold a one-to-one backing of their stablecoins with some super safe assets, like US dollars or treasury bills. It's all about making sure that when you hold a stablecoin, it's actually backed by something of real value. So there's no risk of it suddenly losing its peg and, collapsing in value.
So no algorithmic magic tricks or fractional reserve, shenanigans here.
No, this is about as straightforward and transparent as it gets. Think of it like this. For every stablecoin you hold, there's an actual US dollar or an equivalent safe asset just sitting in reserve, ready to be redeemed if needed.
Right. That definitely helps build confidence. But, transparency is one thing, proving it is another. What about audits?
Well, the Stable Act tackles that head on. It requires monthly reserve reports, public disclosures, and independent audits, all to ensure that the issuers are actually playing by the rules and holding those reserves that they promised.
Yeah, talk about keeping them honest.
Mhm.
So transparency and audits are crucial. But what about the financial stability of these issuers themselves? How does the Act address that?
Well, it calls for regulations on capital, liquidity, and risk management. The idea is to make sure that these stablecoin issuers are financially sound, that they have enough liquid assets on hand to meet redemption demands, and have robust risk management practices to handle any kind of market fluctuation. It's about making sure they're not playing fast and loose with people's money.
It really seems like they're trying to make the stablecoin market as robust and as well regulated as the traditional banking system.
That seems to be the direction, yeah. And of course, it wouldn't be complete without provisions for customer protection. The Act lays out rules for custodial services, safeguarding your stablecoins from things like creditor claims.
So if a stablecoin issuer goes bankrupt, your stablecoins are protected.
That's the goal. The Act aims to shield your stablecoins from being treated as assets of the issuer in case of insolvency.
Okay, so we've been focusing a lot on this Stable Act, but that academic paper you mentioned also briefly discusses an alternative approach, something called the Genius Act.
Right. The Genius Act, while not our main focus today, definitely offers a different perspective on stablecoin regulation, particularly when it comes to like permissible reserve assets and those auditing requirements. It even suggests that, its implementation could have specific implications for Tether given its current market dominance.
Huh, interesting. It seems like there are multiple schools of thought on how to best regulate stablecoins.
Absolutely. And, that kind of reflects the evolving nature of this whole space, right? Lawmakers are trying to grapple with how to strike the right balance between fostering innovation but also protecting consumers.
For sure, and it's not just about finding the right balance at the federal level either. The Stable Act actually lays out a framework for both federal and state level regulation.
Yeah, that's a key point. The act acknowledges the role of states in, overseeing stablecoin issuers that operate mainly within their jurisdictions. So basically, it gives state regulators primary authority over, those state qualified issuers.
So it's not just a top-down approach from the federal government.
Not at all. In fact, the act even allows states to cede some of their regulatory authority to the feds if they choose to, through specific agreements.
So there's a certain degree of flexibility kind of built into the system. But I'm guessing there are also some safeguards in place to prevent what you might call regulatory shopping, where issuers try to find like the most lenient jurisdiction to operate in.
Yeah, you're right to point that out. The Stable Act includes requirements for information sharing, between state and federal regulators, specifically to prevent that regulatory arbitrage, which is exactly what you're describing.
Makes sense. Makes sense. Okay, let's shift gears a little bit and talk about, the potential impacts of this Stable Act, both good and bad. That academic paper had a lot to say about this, and I know you've been following these developments closely too.
Yeah, I mean, we're about to get to the heart of the matter here. What could this all mean for the future of finance?
Exactly. So let's start with the potential benefits. What are some of the ways that the Stable Act could positively impact the stablecoin market and the broader financial system as a whole?
Well, for starters, increased regulation could boost confidence in stablecoins, making them more appealing to, both individuals and businesses. Think about it. If you know that a stablecoin is backed by safe assets and subject to those regular audits, you're much more likely to trust it and, actually use it for your everyday transactions.
It's all about that trust factor. And, if stablecoins do gain wider adoption, they could really shake up the whole financial landscape. Imagine like near instantaneous low-cost payments across borders. I mean, that could be a game changer for global commerce.
Totally agree. And it's not just about payments either. Stablecoins could revolutionize those lending markets too, making it easier for people to access credit and potentially leading to like lower costs for those borrowers. And there's even talk of stablecoins playing a role in strengthening the US dollar's global standing.
Wow, okay. So there's a lot of potential upside here. But let's not sugarcoat things. What about the potential risks? The downsides of this Stable Act. The academic paper, it did raise some concerns about unintended consequences.
It did. And those concerns are valid. One worry is that excessive regulation could actually stifle innovation, make it harder for smaller players to enter the market and potentially lead to further concentration of power in the hands of, those large institutions.
So instead of fostering a more inclusive and decentralized financial system, we could end up with the same old players kind of calling the shots, just with new technology.
That's a risk for sure. And there's also the concern that those regulatory burdens could drive up costs for those stablecoin issuers, which, could ultimately be passed on to consumers in the form of higher fees.
Right. And then let's not forget about the risk of just, those unintended consequences. Sometimes even the best intentioned regulations can have, unforeseen negative impacts.
Always a possibility. The stablecoin market is complex. It's constantly evolving. So it's crucial for those regulators to be flexible, adaptable, monitor the effects of the Stable Act really closely and be willing to make those adjustments as needed.
It sounds like navigating this whole new regulatory landscape is going to be a very delicate balancing act.
Oh, it definitely will.
So we spent a good amount of time dissecting the Stable Act, but I want to kind of zoom out and talk about like the broader context here. What's happening in finance and technology as a whole.
You're thinking about the convergence of crypto, AI, and just the relentless march of digitalization.
Exactly, exactly. These forces aren't just reshaping finance, they're changing how we live, work, how we interact with the world. I mean, it's mind-blowing when you really step back and think about it.
It really is. And the pace of change is only accelerating. Let's kind of unpack those forces one by one, starting with AI. I mean, AI is infiltrating, It seems like every aspect of our lives these days, from, the recommendations we get on streaming services to the way our cars drive themselves.
It's even writing our podcast scripts now.
Well, not quite yet,
Hmm.
but it's getting there. And, finance is no exception. AI-powered algorithms are already being used to analyze massive amounts of data, identify trends, make investment decisions at lightning speed. There are also transforming areas like risk management, fraud detection, customer service, all within the financial industry.
And I'm guessing that, stablecoins could play a pretty significant role in this whole AI-powered financial revolution, right?
Oh, absolutely.
Yeah.
Imagine a world where AI-powered financial advisors are using stablecoins to, manage your investments, optimize your savings, even automate your bill payments. It's like having a personal financial guru, available 24/7, constantly working behind the scenes to make your money work harder for you.
It sounds almost too good to be true, but I can definitely see how the combination of, AI's analytical power and the efficiency of stablecoins, that could create some truly disruptive financial products and services.
Right. And then there's the digitalization of, well, everything. Our lives are increasingly moving online, and finance is no exception. I mean, we're already doing so much of our financial activity digitally, from, mobile banking and online shopping to, peer-to-peer payments and contactless transactions.
Yeah, I can't even remember the last time I actually went inside of a bank branch.
Exactly. And this trend is only going to continue. As those lines between the physical and digital worlds continue to blur, stablecoins could emerge as the preferred currency for all sorts of online activities.
Like, give me some examples.
Think about virtual reality experiences, the metaverse, online gaming, even microtransactions within, apps and platforms. Stablecoins could provide a seamless, low-cost way to, exchange value in these digital realms.
It's fascinating to think about how these trends, crypto, AI, digitalization, it's all kind of converging to reshape this whole financial landscape. It's exciting, but also a little daunting.
Agreed. It's hard to predict exactly where this convergence will lead, but it's clear that we're on the cusp of a major transformation in the financial industry.
Okay, so time for some bold predictions.
Mhm.
What do you think this transformation will actually look like in, let's say, the next few years?
Well, for one, I think we'll see the emergence of entirely new financial products and services, built on this intersection of these technologies.
Give me an example. Paint a picture for me.
Okay, imagine decentralized lending platforms that use AI to assess creditworthiness, right? And they use stablecoins to facilitate instant low-cost loans. Borrowers could get access to capital quickly and easily, while lenders could enjoy, higher returns but with less risk.
That would be a game changer for, small businesses and entrepreneurs who often struggle to get those loans from those traditional banks.
Exactly, exactly. And what about AI-powered investment platforms that use stablecoins to create diversified portfolios tailored to your individual risk tolerance? You wouldn't need a financial advisor. That AI would handle everything, rebalancing your portfolio, adjusting your investments based on market conditions and your financial goals.
So it's like a personalized investment manager, just
Yeah,
right there in your pocket.
pretty much, yeah.
I like it.
And I think we'll also see a blurring of the lines between those traditional financial institutions and the crypto world. Banks are starting to realize they can't just ignore these trends. They have to adapt or they risk being left behind.
So you're saying we might see banks offering stablecoin-based accounts and services in the future?
It's already happening in some parts of the world.
Yeah.
And as stablecoins gain wider acceptance and there's more regulatory clarity, I think it's only a matter of time before those major banks fully embrace this technology. They'll have to if they want to stay competitive and relevant.
It's really going to be interesting to see how this whole financial system evolves as these trends continue to unfold. But I can't shake the feeling that, there will be winners and losers in this race.
There always are.
So let's play that game for a minute. Who stands to benefit the most from, the rise of stablecoins and this whole convergence of crypto, AI, digitalization?
Well, I think the most obvious winners are consumers. If stablecoins deliver on that promise of lower costs, faster transactions, and, greater access to financial services, individuals stand to benefit immensely.
And what about businesses?
Businesses, especially those operating globally, could also reap some significant rewards, from those reduced transaction fees, streamlined cross-border payments, and just the ability to tap into those new markets more easily.
But what about those existing players in the financial system?
Mm-hmm.
The banks, the payment processors, the big institutions. Are they going to be left out in the cold?
Not necessarily. The ones that are willing to adapt and embrace these technologies could actually find themselves in a stronger position than ever before.
So it's not necessarily a zero-sum game.
Right. Think of it more as a reshuffling of the deck. The players might change, the rules might evolve, but the game of finance will go on.
I like that. That's a very thought-provoking way to put it. I can practically hear the gears turning in the minds of our listeners as they try to, process all of this.
I hope so. The future of finance is being written as we speak. And it's up to all of us to stay informed, engage in the conversation, and help shape this exciting new landscape.
Nicely said.
Yeah.
We've only scratched the surface of what this convergence of crypto, AI, digitalization could mean for the future of finance. In our final part, we'll zoom out even further. We'll explore those broader implications of these trends, for society, the economy, and even the very nature of money itself.
It's going to be a fascinating discussion.
We've talked about stablecoins, regulations, AI, digitalization. It's a lot to take in.
It is, and in this final part, I kind of want to step back and look at the bigger picture, zoom out.
I like where this is going.
Okay, so imagine a world where stablecoins really do go mainstream, like they really catch on. What would that mean for, the financial system as we know it?
That's the million-dollar question, isn't it? I mean, some people are even saying that stablecoins could, challenge the dominance of traditional banks.
It's not an unreasonable prediction. Banks have had a pretty tight grip on our financial lives for, centuries. But stablecoins, with their speed, efficiency, global reach, they do offer a pretty compelling alternative.
Yeah, and let's be honest, banks haven't always had the best track record when it comes to, actually serving their customers.
There's definitely room for improvement, right? We've all heard those stories of hitting fees, predatory lending practices, and just the general slowness and bureaucracy of the traditional banking system.
Exactly. And stablecoins, on the other hand, they have the potential to create a more open, transparent, and honestly, a more accessible financial system, right?
Exactly. One where individuals have, much more control over their own money and can transact directly with each other without needing to rely on those intermediaries.
That's a powerful idea. But okay, let's play devil's advocate for a minute here. What are some of the, potential downsides of a world where stablecoins actually do become the dominant form of money?
That's a great question, and it is really important to consider those potential risks. One concern is that a rapid shift away from traditional banking could destabilize the financial system.
So it's not just about, the technology itself. It's also about how we manage that transition.
Exactly. Another risk is that, a more decentralized financial system, one that's based on stablecoins, it could be more difficult to regulate, potentially leading to, increased fraud or other criminal activity.
And what about privacy? I mean, in a world where, all transactions are recorded on a public blockchain, how do we protect people's financial data?
That's a valid concern. We need to make sure that, that privacy and security are built into these new systems from the ground up.
Yeah, it seems like there are a lot of really complex issues to consider as we, as we navigate this whole transition towards a more digital, and a more decentralized financial future.
There are, but I do believe these challenges are surmountable. We have the technology, we have the ingenuity to create a financial system that is more efficient, more inclusive, and honestly, one that empowers individuals.
It really sounds like, we're standing at a crossroads here.
We are. And the decisions we make today, they're going to have those far-reaching consequences for the future of finance and honestly, for society as a whole.
So what can our listeners do to, to stay informed and actually be part of this conversation?
First and foremost, stay curious.
Right.
Keep learning about stablecoins, blockchain technology, and just those broader trends that are shaping, this financial landscape.
And don't be afraid to ask questions and challenge those assumptions.
Exactly. Engage in those thoughtful discussions. Share your own insights and help shape the future of finance.
Well, this has been an incredible journey. Exploring the potential of stablecoins, the challenges of regulation, and those broader implications of this, this technological revolution.
We've covered a lot of ground, but honestly, this is just the beginning.
The future of finance is literally being written as we speak, and it's up to all of us to make sure it's a future we can all be proud of.
Well said. That's a great note to end on.
Thanks for joining us on this deep dive into the world of stablecoins and the future of finance. We'll catch you next time.